Hello, hello! So Rocket Lab got a big upgrade and it's one of the hot stocks right now. Morgan Stanley just turned bullish on Rocket Lab, upgrading it to overweight from equal weight, raising its price target to a street high of $105. With Neutron and Electron, their space rockets, remaining key catalysts here. Now, we're going to examine the stock like we should, like we usually do, not just, accepting everything we read online. So the first thing to see is what the company has been doing when it actually became a thing, when it IPO'd. We're gonna see the finer details. But first, let's begin with the stock price. And you'll see if I take it back to 5 years, which is about when it debuted, you will see that for a long time it was pretty much the same thing here, trading sideways. And then it had a boom in the past year or so, if not a little bit earlier. But you will see here in the core valuation metrics that pretty much everything is negative because the company is losing a ton of money on purpose, just because they are investing a ton, and we're gonna see these in detail, with the net income also going down. And the nice thing, the good thing about the company though, is the fact that they have revenue, and they have revenue that keeps increasing a lot, so making things a little bit more confident, if not much more confident actually. When you're losing money, you want to at least be getting a ton more revenue, growing, which is super important, and they grow a ton, which is nice to see. But you will see that all of these metrics here are negative, and it happens with pre-revenue companies, or companies basically that are not really making money because they are investing. But for this purpose, this is why we have all the tools here that we have. We can examine what the company has been doing through the years and what is their current model is, and decide whether it makes sense to actually buy the company. Is it going to be a multi-bagger in the future, or is it just going to lose us money? Now, with the tool, you will discover some insights that you probably haven't heard before, and you will see later in the video. If you take a look at the key events, you will see what has been going on with the company, and some interesting things to notice here is that they are raising a ton of money, like 355 million via convertible notes. And convertible notes is pretty much a fancy way of saying, okay, I'm gonna give you money, but in return I want to either to be able to convert the money, the loan I gave you, to shares in the future. So practically speaking, this points to more dilution in the future, something that happens a ton with companies because they fund themselves with shares. And again, we have seen this with this company as well, having dilution. Now, I have a very nice section here telling you about the corporate history, what has been going on with the company, pretty much being a SPAC merger back in 2021. And if you click, you will see the actual structure here via a SPAC shell, which is called Vector Acquisition Corporation. Typically, these are like 10-minute shells, basically, so that you have the new assets in the new company, typical SPACs. And there are some other things here, like business combination for the company, the SPAC merger. This is the actual merger here. The previous one was announcing the merger, pretty much. And this tells you about acquisitions of the company, pretty much the whole history. But if we take a look at the income statements of the company, now remember the SPAC happened in 2021, I believe, is what we saw. So this is pre-SPAC here. This is why it's empty. So you're going to be seeing the pre-SPAC structure as, assets come in. But now, FY 2021, again, it's not a full year. It's going to be a little bit less than you would expect, because this is when they went public, sort of. It's not really public, it's a SPAC. So, but the concept is the fact that they actually entered the markets, pretty much, the public markets. And from then, they have been doing really well in terms of revenue. Take a look at the revenue, and it keeps increasing. And even TTM is actually increasing right now compared to the fiscal year, the previous full fiscal year. With the company also having spending a ton in cost of revenue here. This is like satellites and stuff. So it's, parts of satellites and all these. It's like expensive things, obviously. And if you're not aware about this company, it may make sense to take a little bit of a stop and take a look at the company profile, actually, where you will see that they design, manufacture, and operate small and medium class launch vehicles. Electron is the current one. The one that they are developing is Neutron. It's going to be much higher scale. In this way, they spend a ton of money. Sells dedicated and ride-share launch services. These are services like, think about the Starlink that SpaceX is doing, sort of like cargo ride share. It's not really humans, but it's extremely important, and government and other entities have close contacts with companies of this sort, because they want to be getting satellites and things of that sort up in space. So they have like hardware sales and things like this, transaction-based contracts and all that stuff. Government is a big thing, and I believe they have a pretty big government customer, which we're gonna see a little bit later too. Now let's go back and see also we can see actually the income statement. We're at the income statement, and we get a sense of a company that is growing a ton, and they have a ton of operating expenses as well. Like you see here, the research and development, look at how this grows. This grows in the millions every year pretty much, and the operating expenses again growing a ton, with the exception of this one, which was the SPAC year, the sell year pretty much. And pretty much you see a company here that is spending a ton of money and losing money eventually, but that is kind of controlled. It's what they want to be doing. It's in their growth phase. So it's understandable. And now we need to understand more about the company in terms of their operations, because for now, we don't really know what is going on. Like, okay, we are seeing some numbers, a company that is growing, they're spending money in research and stuff. This is what we saw. Their numbers are down because, that's what you'd expect out of their current situation. They do it on purpose. But what is going on? The quick takes here are going to show us the picture, the initial picture. 1 billion cash pile, $0 from operations funded by you. And this is exactly what is going on, right? You would expect that. They ended the quarter with about 1 billion in the bank, so they aren't going broke anytime soon. Obviously, this is a company that's going to keep growing for a while at least, unless something bad really happens with them. So they have spent about 101 million more than they brought in from operations this year. And the catch is that if they run into delays with their new rocket, and there is some issues, some potential reasons for this, they will likely have to ask investors for even more money. It's a typical operating cash burn and liquidity position that you will see out of new companies that are striving to increase their growth, pretty much. Now, science project, success is the only option, 192 million. You see how credible is management's timeline and budget for developing Neutron, and what would further delay cost shareholders. And you will see that Neutron is the value inflection, heavy R&D, what we saw earlier, remember, in the income statement, but timeline and budget remain uncertain. And so a skeptical analysis here will tell you that the bottom line is Neutron's success is the largest value driver. Something that if you haven't examined the company, you wouldn't know. But if you have, you definitely have seen that is pretty much their big rocket here. So if milestones slip or funding needs increase, then you would expect some share price downside. So this is something really, really important, and Quick Takes gives you this analysis very quickly. Founder's veto. You pay, he stays in charge. What does this mean? What he did, he actually swapped his stocks for preferred stock. And actually, we have that even in company profile in the key events. We could have gotten it by that, because it actually registers this event, and this is stock agnostic. It happens with all our stocks in the system that I have. And you see, Rocket Lab founder agrees to swap $50 million in shares to preferred. And the bottom line, actually, the AI tells you what this is. He preserves founders' control without immediate dilution while adding pay and RSUs. Typically, they do this for control. It's like voting rights. So they take away some of your voting rights, pretty much, by getting preferred stock. But it's a governance move. So if you actually believe in Peter Beck, you would be willing to be fine with this. So it's kind of a neutral, and it's positive actually if you believe in the guy. So let's go back. You see how all these converge with each other? It's a very, very nice analysis, sort of like an analyst would do, without even having to look at the actual reports, which is crazy. It's really, really nice what the AI can help us with. Now, inventory up, a right of risk if things go badly, meaning that, if they don't sell what they would expect, then they could have right of risks, even though they have large contracts in the future. So probably not a big risk potentially, but it tells you what it could happen. And launchpads is an interesting thing as well, at the bottleneck. If they close, revenue stops. Because I believe they have some government-related launchpads where they launch rockets from, and the fiscal government can be a little bit weird in some situations, causing delays. and you'll see they need to launch rockets frequently, but they are hitting roadblocks. They rely on launch pads that can be shut down by the government. So this is an interesting thing that you need to take into account when you're examining the company. And if we take a look at the key stories, we already saw this one. Now your shares are worth less, what we saw earlier. Remember, all these things converge. And the founder has more power, basically what we saw earlier. And it all comes down to the big new rocket, Neutron. A much bigger rocket, actually, that are going to compete for huge contracts. Very important, because you remember, this is like a smaller competitor, but still a competitor to SpaceX, which SpaceX is doing even more things, of course. They are actually trying to colonize Mars, I suppose. They are spending massive amount. This is not what this company is doing. This company is more about cargo, satellites, and things of that sort. Making hardware, things of that sort, for now at least. But still, it's a big thing, and it's like sort of like a Reddit meme company. Rockets go up, That's how it works right now, and this is why this insane valuation here. They're spending massive amounts of money, nearly 200 million on research just this year, what we saw earlier. And the catch is that they haven't shared a clear schedule for when it will be done. So the strategic importance here. You see exactly what is going on with the company, but they have a big pile of orders, but numbers can be fuzzy. So they say that they have 1 billion in orders waiting to be filled, which sounds great, but here's the kicker. Because of how they do their math, a tiny change in what they project will cost or can make the profit numbers jump around widely. Again, kind of expected for new companies and companies of this sort, while launch delays is the thing that we talked about. Now, remember what we saw about the CEO trading shares for preferred? I have a very nice section here in insider trading, and I have made it in a way that gives you actual insights. It's not just like a table. I've tried, at least. I think it works really well. You see here what has been going on in Q3 2025, for instance, and you can even go back if you want to and see the past. But now this is even more interesting, what happens here. So there has been a large holdings reduction, insider activity, from Beck, the CEO, who sold 42% of holdings with a value of 127. And CFO also. CFO is very important. The tool actually recognizes mostly these two because they know the most about the company's financials, especially the CFO, frankly. And he sold 31% of his holdings, but the tool actually recognizes pre-planned and discretionary sales. And as you'll see here, the CEO actually sold with filing a pre-planned share, so it's like months in advance. But the CFO actually sold discretionarily, and he sold about 135 million discretionarily, meaning he can basically sell within a day. A discretionary sale is basically, okay, I decide to sell tomorrow or in 2 days. I say I have to file and actually recognize that I don't have any inside information. That's how it happens. But then I can sell in like 2 or 3 days. And this is important because now you know that he actually sold in a hurry. So this could be more of an attention-seeking thing from us. And this is why I wanted to recognize it this way in the tool, and so that you know what happened and you can make your own decision. This is a pretty large amount here, and his sales has been discretionary, which is not what we love to see. Now, he could be buying a house or something. He needed the money. But, it's something that you need to recognize, and it's food for thought, frankly. And so you can't really be taking a look at the stock evaluator like the DCF will give you tremendously low numbers, or basically it will tell you to buy the stock at $5 when right now it's sitting at 80. And you can understand it, a capital intense company, a company that is growing, and a super overvalued company because it's a growth story and people flock around it, sometimes not even recognizing and realizing the numbers, frankly. They are actually waiting on a multi-bagger pretty much that's going to happen in the future. That's why they keep buying. And, there is the trend, there is a discussion about the company and it keeps going higher, but the price to free cash flow is a huge number that is negative too. So, companies losing money, and even then it's a huge number. So, make of it what you want. It's a bet. It's definitely a bet. Betting on a company that could potentially produce a huge amount of money in the future. It's possible, but right now, as a conservative investor, you wouldn't actually buy this one. As an investor who likes to potentially buy a little bit cautiously of stories that could do really, really well in the future, maybe buying something like $1,000 of this and waiting on it for 10 years or something, maybe it's not the worst choice in the world. with a world that is piling on data and things like satellites and stuff of that sort, I could see this becoming a success in the future. So, this is the whole idea about companies of this sort and buying them in the current time frame. But in terms of analysis, and even if we take a look at the stock alerts here, which usually give us great insights for companies, in this situation, a lot of these are going to be green, understandably so, because the company is doing it on purpose, and that's the only thing they can do right now, right? And they have to do it, frankly. But you will see negative numbers, understandably. Earnings quality negative, free cash flow negative. Obviously, it's going to be negative, and things like, for instance, the share dilution is going to be negative. Again, understandably so. That's what I wanted to talk about, but I'd love to hear your opinion about the company. And remember, always, you can access the tool freely. The tool Stock AI Insights is free to access for everybody, so you can just join and take a look at the free plan and see what you think of it. I'd like to hear your opinions because I'd like to make it better. So yeah, please do so if you're interested. And thanks for watching this again. I'll see you in the next video. Bye bye.